For those of you who don't know, TIPS are Treasury Inflation Protection Securities. And what we've been seeing is that 3 and 5 year TIP break even, which is a good predictor for the amount of embedded inflation that will be here 3 and 5 years out. It's the highest it's been in 36 months. So when I start seeing 3 and 5 year TIP break evens anchoring at the highest rate they've been for 3 years, that tells me something. And it should tell investors all across this nation that they shouldn't be average with their fixed income. David, fixed income and bonds, we've always said that bonds are for ballast. So talk about platform of how people should be accessing bonds in addition to their broad-based ETF or fund components.
Sure. I mean, I think the key is over the last 5 years, fixed income returns have been relatively flat. And the concern for investors has been traditionally bonds have moved in an opposite direction of stocks, but that hasn't been the case recently. And that's where some of that concern has come from. So the platform, it's not a one size fits all, but if I was going to retire, and we eat our own cooking here, so our money's invested the exact same way as our clients' money. If I was going to retire and I knew I had to take out a specific amount of money, our platform allows us to ladder out municipal bonds, corporate bonds, treasuries, you name it, in a portfolio, which means we own the individual bond, no expense ratio on that. And we define what those maturity dates look like. Why is that important? What's the maturity date on a total bond market ETF? It's a trick question, right? There is no maturity date. We don't want that risk, right? Coming into this year, no one expected yields to move higher, right? We came into this year, Craig, saying we're going to get a new Federal Reserve chairperson. They're going to cut interest rates. Like everyone's thinking that's what's going to happen. Now the opposite is occurring because of inflation. The way that you can mitigate some of that inflation risk, AKA interest rate risk, is you got to go to a place like VestGen where we have a larger platform to ladder things out, because then you have some certainty in a portion of your portfolio. It's hard to create that certainty on the equity side of it, but it's a little bit easier to create those defined outcomes on the safe money side. And I think we do an excellent job of doing that because we have such a large team behind the scenes.